Hello everybody, this is Marcus Green, the Savvy Investor, and today I'm going to walk through our Proforma tool. As many of you know, I buy a lot of investment properties, and one of the things that I needed the ability to do was being able to look at a lot of properties quickly to determine quickly if it was worth my time or not putting an offer together and pursuing a property. So I built this software, which I'm offering free to all of my followers at savvyinvestor.biz/proforma, which gives you the ability to quickly analyze a property within a few minutes to determine whether it's worth pursuing or not. So I had a deal brought to me today that I'm going to look at and see if it's worth putting a deal on. So if you go to savvyinvestor.biz/proforma, you'll put in your name, your email address, the purchase price, what you're offering on it. Don't worry. You'll be able to alter this inside the program here, and whatever the loan to value ratio is, and it will automatically start to populate the pro forma. So as this opens up now, all you need to do is go through, and anywhere there's a blank, go ahead and fill that information in, and it will auto-populate all the other information. So here's the property that we're looking at today. It's a little townhouse, 3-bedroom, 2-bath, 1,100 square feet, a little over 1,100 square feet. And I'm just going to walk you through exactly how this pro forma works and what the numbers it kicks out at the bottom. So the initial market value, this exact model just sold for about $154, so in a bit similar condition. And you'll notice that I tend to be a little conservative on my numbers because I want to win on all my deals. I don't like pressing the limits. So we're at an 85% loan to value ratio on this one with an interest rate of about 5.4%. The closing cost, this is going to need minimum work, so we're going to put $4,000 in this area. And the square feet on this unit is 1,110 square feet. So you can see as I'm putting in this information in the white boxes, the gray boxes start to auto-populate. Now, in this box here, we need to make some assumptions about the property. Now, it's already filled in, but you're going to want to look at the property specifically and change these to the property. So here, the real estate appreciation in this market, we've been experiencing over an 8% appreciation over the last couple of years. But this townhome project in this area, I think it's going to start to normalize, and we're going to put this in at 4.5% for the next year. Vacancy rate has been very low. We're going to leave that at 3%. Management fee of a standard 10%. And the maintenance percentage is in at 3%. This property was built in 1985. Is in pretty good condition. I'm going to bump that up just barely. Now the performance details, we know we can get $1,125 a month, no problem for this property. And you can see based on our vacancy rate above, it automatically calculates in our vacancy loss. Property taxes on this property are going to be $600, and the insurance is going to be in the $500 range for this property. HOA dues, this is one of the reasons I avoid condos and townhouses a lot of the times, is because the HOA dues can be significantly higher. They're $108 for the HOA on this project. There is a box for other expenses. If there was a property where you were going to pay for the utility bills or the landscaping, that would go here. In this instance, the HOA does cover the landscaping. In most of my properties, I do require the tenant to take care of the landscaping, but I do have this box in there in case you need it. So as we get down here, it's now going to calculate our first year estimated net performance. So we can see that our net operating income on the property is going to be annually $8,800. Our total gross revenue is the $13,500, but as we calculate in our expenses, it's going to give you a net operating income of $8,800, and your mortgage payment at what's outlined above is at $7,789. So you can see that our before tax cash flow here isn't very significant. It's $85 a month and a little over $1,000 a year. This also calculates based on the mortgage payment how much of your payment goes to principal, and then what you can look at for your first year appreciation, because I'll show you below the two numbers that are most significant to me are the cash on cash return, but also the effective return on investment, which takes into consideration what principal you pay down and also what happened to your net worth statement by the appreciation that occurred on the property. So these really are the 5 indicators that I'm most interested in. I know there's some very extensive pro forma softwares that you can buy that give you a lot more. Again, this is just a quick and dirty way to analyze a property quickly, and I can look at the indicators that are most important to me. You know, a lot of people talk about cap rate, which is significant, but again, the 2 most important to me is what is the cash on cash return, which here it's 4.18%, and the effective return on investment, which is 35%. So in this instance, it's harder and harder to find great cash on cash returns. You know, generally, I like anything above 9% right now on the cash on cash return, on a conservative cash on cash return, and an effective return on investment of 36% is really good. So this property may work in the instance of, you know what, it's in a strong area, the things around it are being built out, and I have a lot of confidence in the appreciation going on. But you can see here I'm also buying an under market value, only by about $14,000. So I get some instant equity there, but it doesn't give me a lot of room to fluctuate in. So this is a deal that I'm probably going to pass on and start looking for something that I can get closer to a 8-9% cash on cash return comfortably and a little bit higher effective return on investment. I may go back to the owner, see if we can get it for a little bit cheaper, to see if we can get that a little bit closer. But the main purpose of this video is to help you understand how to use this tool. It is free to my users. Use it as much as you want. By putting in your email address at the front, you're not going to get hounded with a bunch of emails from me. This just gives me an indication of who's using it, and so I can make the tool better. But I wish you the best. Happy investing. If any of you are interested in coming to any of my investment seminars or connecting or following me, please do find me on Facebook, mark a screen, or go to our website, savvyinvestor.biz, and let me know you're interested in coming to our next Investor Summit. Happy investing.